Hello folks, I'm L.A. Little and this is your weekly TA Wrap, where we take a look at these markets each week from a neoclassical perspective, asking ourselves, what happened last week and does it tell us anything about the coming one? I do a show every Sunday night live at 9 o'clock Eastern Time here from the base of the Rocky Mountains, the beautiful Rocky Mountains. I was out today. I had a snowstorm last night, but it was really just a dusting. And you know, the way the snow gets captured and then starts to melt a little bit, you get that sheen, if you will, on the rock cliffs. Sometimes you know, with the sunlight on it, it's just gorgeous. Took a ride out and about, and beautiful sight out there. So speaking of a beautiful sight, what about these markets? Pretty much sideways last week. They really couldn't get anything going. Let's take a look at it and let's think about what's happening here from a week-to-week perspective. So if I look at it on the daily, you know, we've talked about this for quite some time, and I'm on the SPX now. You know, we got this big range that's in effect, and that range has been in effect for a while. The key here so far is what's happening up here in these last 5 bars, trying to get over this big breakdown bar. Right? Pretty decent volume there. You're hitting it with a little bit less volume, but you've tried 5 times and haven't been able to get over it and stay over it. You know, so that is a failure. I mean, there's no other way to put it, right? Does that mean that this thing's going to come back? Well, could mean that. Or does it mean it's just going to simply go up here and you know, do some sideways stuff, maybe get as deep as you know, maybe even as deep as this area, right? That's all possible. Right, that would be kind of a sweet spot to think about buying it if it got back down there. But the question is what is it going to do? Is it going to do that? Is it going to hang up here? What's it going to do? Right. Well, if I look at it from a weekly perspective and I pull the weekly over, you know, here I can see that I went over the high of the prior week, right? But I actually had more volume. So as I go over, I have more volume. If I look at the breakdown bar, I have less volume. So 196, top of that is 1849. We didn't quite get to it yet, 1847 and a half. So on a weekly, we haven't tested, quote unquote, the breakdown bar that is on the weekly. We did go over, back under on the daily, but we actually had more volume. So that suggests, on a weekly basis, that by the time we get to the end of next week, it's probably going to be sitting about the same spot. It's probably not going to change that much. So that, to me, suggests, at least on that simplistic examination, that this thing is probably going to do some sort of range trading up here. Now, I would think, you know, given that it's already 5 days, you know, 5 bars here sideways, that if they can't get over this within the next 2 or 3 bars, you're going to see them shake the trees and push this thing back down and take some of the weaker longs, right, back out of their positions. I mean, that's a favorite thing they love to do. And so you might see some sort of a big, fast snap back. And if it comes with like no volume back into this zone, maybe into this bar, you know, or maybe into the bottom of that swing point low, or maybe even test this low here as it came back. If any of those come back, no volume, that probably is just a shakeout before it tries to break higher. So, you know, be careful if you're trying to trade this real tight, that you don't get shaken out of some positions that you'd rather stay in, and it be just simply a false move to the downside. Now, the risk on the downside, of course, is that it starts breaking some of these lows. And the key areas, you know, the TA Today charts kind of points them out to you, is this zone here. There's actually, you know, if I were looking at it and drawing it, I'd probably have another zone down there. And if you get past those two, then it kind of gets problematic, right? Because then you kind of have a little area here, a little area there, and actually another area down here. And you got gaps in most of these. I believe there's a gap in this one, if I remember right. There's a gap in this one, I know. And I believe there's a gap, yeah, there is a small gap down here as well. So, yeah. So this, you know, if this thing comes back and starts breaking down, it really could travel lower. And this big range that we've been in really does play out as a huge range. I mean, that is possible. But right now, there's a number of reasons to think that's probably not exactly the way it's going to do. It's probably going to find support higher. And I'm going to flip to two other charts, and then I'm going to look overseas. I'm going to go to the IXIC next. And if I look at it, you know, this last week on a daily basis had to retest and regenerate off this high. And it did hold, and it did regenerate higher. Now the question is can it continue? Volume is a little bit higher on Friday, so you know this thing could go back up and test the highs. There's nothing to stop it. If I look at it from a weekly standpoint, you know, it's not quite the same picture, but it actually looks pretty good. I mean, it got up. That top last week's 42.50.91. You got the 42.63 on the close, so you're actually at a higher high. So IXIC doesn't look like, and that's the NASDAQ composite, doesn't look like it's ready to give it up. Now another one that's kind of on the other side of the ledger is the Russell, because the Russell is doing the same thing the S&P is doing, and that is the Russell is on its breakdown bar, which happens to be 24th, and it can't get over it and stay over it. So the Russell, 3 days sideways, pops up on Friday, doesn't really have that much volume compared to what it's going into. That looks like a failure on the daily. Now on the weekly, it's a different story, because on the Russell you got a long way to go to get back to the top of that breakdown bar, which was really at the highs. So Russell, kind of a mixed signal. Short term looks like it's going to try to pull back a little bit. Longer term could still go higher. If we pop over to look at the international markets, and I'm going to start with Europe, because Europe right now, to me, Europe probably has more impact, if you will. Europe and Asia more impact than even our own markets. And what I'm saying there is, if I go look at like the CACs to start with, and we can look at it on a daily. On the daily, you can see it's breaking out over a swing point high, and then the next day breaks even higher. And yeah, it doesn't have a lot of volume, but it actually had the volume as it went over the high, and it breaks higher here and has less volume. And what that break is there is on the swing point that's back here that had not been tested yet as a high on a weekly. This breaks on a weekly as well, so you've broken on 2 time frames. You know, usually that suggests it's going to carry for another bar, another 2 to 3 bars on the longest time frame, which in this case is the weekly. If that's true, Europe being strong is going to make it pretty hard for us to sell off. If I look at the Footsie, and you know, for us to sell off in any larger way, that's going to stick. If I look at the Footsie's doing the same thing, going right after the highs. The Footsie has an ABCD structure. I did the measurement before I came on air because I thought it was actually through already, but it really isn't. There's actually a little bit farther to go. It projects up to about there. So the Footsie looks like it's going to attack the highs, has the volume coming into those highs, right? It looks to me like it's going to blow right past them, and then probably get some sort of a retrace as it finishes off this ABCD structure. If you look at it on the weekly, on the Footsie, right, you're coming at this high, you've already tested it once. The only highs left is the one back here from May, 68.75. You're at 68.38. You're doing 40.2 into 42. That looks to me like that's going to be a test. And it's probably going to fail that test the first time up there. Probably won't have the volume, and that will be the complete push that you see here on the Footsie, in which case you get the retrace. So a little bit farther to go here, more push. On the CACs, it wants to go farther. And if we go look at the DAX, the German market, which actually has been weaker than the rest, the German market bounced back pretty nicely. It's still doing the same thing the SPX is doing, though. It's testing into the breakdown bar. That's the 24th bar in Germany. That's 96.64. You've tested into it multiple times now, just like the SPX. Then it pulls off hard, but reverses and is right back up there testing again. So assuming the CACs wants to pull higher, the Footsie wants to push a little bit higher, I expect this thing's going to try one more time to get over this, and if it does, then it will probably try to gravitate to the highs. So Europe looks to be supportive on equities into next week. If I flip over to Asia, And I start with Hong Kong. You know, Hong Kong market is coming back into the swing point lows, and we were talking about this last week on a daily basis. It's doing a retest, regenerate into these swing point lows, right? So far, it actually pushed up there with some decent volume, but it hasn't been able to get over them. We'll see if it can. It's got multiple ones it's got to deal with. But the main thing you're always looking at when you have multiples is, can you get over the first one? Because if you can get over the first one and not regenerate lower, then that gives you the potential, right? Not so much the potential, but it gives you the probabilities increase that it's actually going to start chewing away at the other ones and eventually work higher. So you got 3 levels here. It's working into all of them, and you pushed up there with volume on the 20th, and looks to me like we're going to go back up there and try it again. So we'll see if it gets over it. And looking at it on a weekly, remember they had broken down after a swing point low. That was multiple time frames. That led to the fast move down. Now the weekly is coming back up to do the same thing and to test on a retest, regenerate here. So it's into it already. It can still get to the top of the bar. The top of the bar is pretty high, actually. So if we were to get up there, that price point's about 23,124, and we're sitting at 22.5. So you can see that's quite a ways to go still. Another 600 points, another 3% or so. So Hong Kong actually looks positive that it's going to try to fell, if you will, fell the retest and regenerate lower, which means it's trying to go higher. If I go to the Nikkei, and I wrote an article about it last week, it's on the front page if you want to read it. The Nikkei is actually coming into an area that it looked to me like it was going to try to get over and go back and do the retest regens here and test this swing point high. That looks to me like where it's trying to go. There is ABCD structures in place if they can fire off here. So that's the one that's in place that would take it up into the area. It looks to me like that's where that one's going to try to go. So Asia, not going to hurt things. I did see over in Australia, this thing is, remember we looked at it last week, Australia was very strong. That also suggests that China is going to get more movement because they're the supplier, primary supplier there. If I look at the other commodity countries, Brazil did sort of a double bottom down here, is bouncing. Nothing special, but just hanging in there. Brazil actually still looks pretty bad. And if I go over to Toronto and look at the Canadian index, it actually did a failure last week on the daily. Got over the high, back underneath it. That's after an extended move. I expect you're probably going to finally see some sort of a pullback here. What would the target be? I would expect that target to be this retest regen area off of this prior swing point high. So back in this area, that would be the place that you're looking for. If I look at it on the weekly, you can see here on the weekly that they've got, it's not really a retest regen on this one. They've just got a nice push up. I would think it probably comes back into that high. 14,000 there. Let's see what it was over here. Yeah, that is the same number. So that 14,000 number looks to be the place on both the weekly and the daily. And more than likely, when it does that, you know, it's coming back into volume. I would think this thing regenerates higher. So you come back in, you test, right? And the way that would, you know, look here is simply, and that would set up the ABC structure finally, and it's a big one. So you test into here and then you take off. So Toronto, pull back for now, but then probably regenerate higher. Those were the main ones. I didn't see anything else. Taiwan, actually, we talked about Taiwan. Taiwan's trying to push higher. We thought it might, and it looks like it is. It's going to try to push into these highs, and it's got some volume escalation. So Taiwan's looking pretty good. All right, let's go over to the OX markets. So when I talked about at the top of the show that I suspect we're going to hang up here, and you know, when I'm looking, and I'll go back to the SPX as I talk about it, I'm thinking that this market more than likely is going to try to trade, you know, in some sort of a range up here. Maybe get as deep as down here, but trade in this area and work off this big oversold, you know, bounce. Work it off in time, right? Directionally in time instead of in price. And if so, that's quite bullish, because what that will do is, let's just say it gets this deep, that still sets up a huge ABCD structure, just like we saw over on the Canadian market just a few minutes ago, right? That's you know, this is a large structure, and if it fires, you know, it's a big number to the top, and it also will be breaking multiple swing points if it does it. So, you know, assuming it can do that, it's going to be a powerful move if and when it breaks to the top side. If we go over to the OX markets, let's start with the bonds, because I believe the bonds will give you a good clue this week. And the clue there to me is, do the bonds really start to rally and come out of this little range they're in right now? You know, if I were to see the bonds pushing up and back over this area up here, because there is a high volume high here, that suggests it is going to test it at some point. But if it does it right away and starts pushing, and it did hold that bottom we were talking about, that was the test on Thursday, it held, had less volume, everything was right, and then you got the move back up on Friday, which would be what you would expect. Now, question will be is, what does it do when it comes into this big bar, this area? If it gets through resistance, over it, and it just skies on up, right, that's going to be hard for the market to handle. So I just don't think the market's ready for that yet. If in fact it can stay in this range for a while longer, right, then the market could probably handle something like this on a pullback after a breakout. And that's when you could get, you know, this pushing up while the market came back after it had already gone higher. So how this plays out, you know, I would be watching these this week and saying, okay, are they going to break over this or not? If they do, then the bonds are trying to tell us something instead of the market. Gold. I get a lot of questions about gold all the time. Gold looks to me like it's still failing up here. You know, I just don't see how it gets higher up here right now. It's had a tremendous run. It's already done its ABCD structure. It's kind of beyond it already. You know, the only question here in my mind is, how does it work this off? You know, is it like everything else, and does it just go sideways? And does it work it off in terms of time instead of price? Or do you actually get that retrace and get that retest, regen off that prior swing point high, this one over here, right? Do we come all the way back down into this area? And you know, gold is volatile, so it won't take a lot to get gold, you know, to push down this far. It's not that big a deal for gold. So pull back into here, that's probably a nice buying opportunity. You know, right now it's really stretched. If I look at silver, it's the same case. It looks to me like these guys are going to try to come back. So if you've been playing the run and you're still, you know, long and strong, if nothing else, put some stops on them, because, you know, if these start to tumble back down and start filling these big gaps, then you're going to see, you know, the gold stocks themselves get hit as well. And let me see, what was the other thing I wanted to cover here? There was one other one. Oh, the dollar. So let me go to the dollar. Actually, let's look at the commodity markets. You know, the commodities themselves, with the dollar weakening, you know, commodities have had big runs. This is the oil market, for example. Oil went from 32.60, almost 70, to 37. So that's almost 430. That's about 11%. And that's pretty much a straight up move, right? 11% in roughly 2 months, right? A little less than 2 months, about 6 weeks. That's a big move, right? In the ABCD structure here, just like we see in gold, you know, it's done. And there's a bunch of them inside here, but that's kind of the big one. And it's pretty much done. This thing should try to pull back and do a retest regen off this prior high. So you would expect it to at least get back into this area, and that's where it would try to regenerate, set up another ABCD structure to go higher. But they've had good runs, and a lot of that run has been a result of the dollar being as weak as it has been. And the dollar, even though we've got the tapering going on, the dollar can't get going. And I'm not sure what to make of that. Because you would think with tapering, the dollar would get stronger. But right now, the dollar's in a big range. It can't get out of that range. It did test and fell to break lower. Got a little bump up, and nobody came in to buy it, really. So it's still hanging here at the bottom end of the range. If I pull over the weekly and look at the weekly, right, that swing point low is there. You got swing point low as well on the daily. If you break that, you're going to this low. That's 21.34. We're trading at 21.52, so roughly 20 cents. You know, it's not a huge move, but it's another percent to the downside. And I would think it would hit it pretty much in fast order. If I put it on the monthly, you know, because that's a swing point low as well there. On the monthly, if you start taking these guys out, and so far, you know, it took out this monthly. There's another one over here. Actually got them both, and it didn't regenerate, and it didn't actually push faster down. So on the monthly, there's really not much below that. You do have a high volume low, though, on the monthly at 20.84. So 20.84, if you take the price point today, which is 21.40, I think it was, 21.52, you know, what is that, 70, roughly 70 cents? That's a pretty big move. That's 3%. 3% decrease in the dollar, you'd see these commodities run and run pretty fast if, in fact, that happens. So the dollar, really, if you're playing the commodity market, you really want to keep your eye on the dollar and what the dollar is doing, because if the dollar strengthens, it should hurt those commodity markets near term. In another market, commodity-wise, that's been moving is the DBA. Now, a lot of this is seasonal because as the planting season comes around, and usually you have, you know, a situation to where they trade this thing down during the fall, winter, and then it starts to rise February, March. That's usually the way this works. That's what it's doing because it's mostly grains. So you got a big, nice pop volume coming into this. If you pull this over and look at the weekly, you can see a big break here, big extension. Right now it's broken two more. You know, something's going on in commodities in the ag sector, and it's pretty big moves. So if you want to watch these, if you want to catch them on a retrace, they're probably good for another month or so, it would be my guess. All right, let me look over and see if there's any questions. Questions? Nope. Okay, let me check my email just in case, and my text. And nothing on the text. Okay, so if I go over and look at the sectors, you know, there's a little bit to say in the sectors, but not a lot. The only one that really stands out, you know, let me pop them up right quick here, is the financials. You know, if you take the four big sectors in the market that make up the S&P, and that's what these typically are geared around, one of the larger ones is the financials. And the financials really haven't been able to get going. So they have not a bad structure, but it's not a good structure. But they did leave volume up here as they pressed higher. They were pressing into the swing point low. At bottom was 21.66. You hit 21.74, right, and then you sold off on it. Now it already made a big run. What needs to happen to get this market going, you know, because you can't have technology take you all the way up. It can take you part of the way. Is you need to see this come back, right, and not only test back in here again, but get over it. And that would be getting over that breakdown bar. That's the big test. That's what the financials have to do. The financials really just going sideways here. I would want to see the financials start to move to give me a heads up that something's going on with the broader S&P 500. Because if you look at the rest of these, I mean, technology's already had a big run. The semiconductors have already had a huge run. So I don't think those are the ones that are going to drive it. And you actually had a failure here on technology. And then if you go over to the energy market, which is another big sector, and you look at it, well, the energy market just finished up an ABCD structure to the top side. And, you know, you got a pretty good down day on Friday. I expect it's probably going to pull back and then try again. So energy is probably not going to help you. Technology is probably not going to help you. Financials are struggling, to help you, and the only other one is the industrials and the healthcare. Those are probably the 5 largest ones. Industrials are struggling at that same sort of area that the S&P is in terms of the breakdown bar, and healthcare has been strong, but just like technology, healthcare has had a pretty big run already, and they failed on Friday as well. So when I look at the sectors suggest that it's going to be tough for this market to push higher. Europe suggests that it's going to be tough to push it down and keep it down. So when I put them all together, and I look at the OX markets, unless the bonds really start to skyrocket, they look like they're controllable. Dollar doesn't look to tank. So it looks to me like the market probably is going to try to work sideways this week, and it's just a question of how deep will it retrace, if it's going to retrace. And so my expectation is some sort of sideways action based on everything I see. All right. Alrighty, I think that's really the extent of what I have to say. I'll let it, I'll turn in here a couple minutes early, it looks like. Have yourself a great night, and I'll talk to you next time. Take care, folks. Good night.